essentially I want to get into syndications and be a GP, hotels, self-storage, multifamily. Currently I work for a broker dealer. So I have all the securities licenses.
Really? Erin, are you still
And
on? We were
oh,
just talking about this today.
I heard that. Ding, 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 ding.
so one question is, I was thinking about like starting a registered investment advisory firm. I was thinking about linking in to a broker dealer, and I am seeing people, work for broker dealers. And then I'm thinking about like dropping the licenses and just going at it alone, type of thing. I have a ton of relationships with financial advisors. Are you seeing anything that's like a unique way to do this?
Well, but I want to kind of correct one thing slightly that you just said, which is that there can't be, it's sort of one or the other. All of your transactions-based compensation counts, whether it's equity or cash or a car or dinner. It's transactions-based compensation. So you're not necessarily entitled to something more by not having that license. It's just if you have the license, the syndicator or the issuer is allowed to pay you some sort of transactions-based compensation, whatever that is. So if that's part of the carried interest, the co-GP, co-sponsor, whatever you want to call it, right? We call it Class B when we structure them. Usually, they can pay you directly if you're affiliated with a broker dealer to raise capital. If you're not a broker dealer, they cannot pay you. The sponsor or the issuer cannot pay you to raise capital, right? Unless you are, well, they can't pay you to raise capital. They can pay you if you come into the GP and you do other substantial work besides raising capital, and whatever you make in any of the compensation has to tie back to that other work that you do, the other substantial duties that you have. So in some respects, it is easier to get paid when you're a broker dealer for sure, but you've got all of the regulatory stuff that goes along with being a registered broker dealer, a FINRA registered.
If you do other roles, can you get paid to capital raise? And then if you're doing other roles, can you get equity on a GP while working for the broker dealer, or would a broker dealer have rules wrapped around that?
That you'd have to check with the broker dealer. Probably they're going to have some rules around what other economic interest you're going to get with issuers. So you'd have to check with your broker dealer and with your licensing body. There is one more option though, if you decide you don't want to hold on to that license. And again, for the issuer, it's simplest to say, oh, you're a broker dealer, here's 2% or 1% or whatever it is of whatever you raise, and then have a nice day. So you're right that you might not get equity for that because of the broker dealer rules, not because of SEC rules necessarily, but because of whatever the regulatory rules are. But the other thing to consider, if you really have this network that you think is going to invest, you could set up a fund of funds, right, where you're managing a fund of funds and you raise capital just to put into other operators' deals, right? So there is some regulatory consideration there. You've got to, if you're an RAA, then I guess we don't have to worry about being under an exemption there. So if the RAA is going to be managing the fund, then you can stay out of the exemption requirements, because you are in fact acting like an investment advisor if you're selling securities to invest in other securities, right? So you've got to come under an exemption, or you've got to be registered there. But then you get paid at your fund of funds level, basically by your investors, not by the issuer. So what that means is if you raise a fund of funds, let's say it's $10 million, and you invest across multiple operators deals, multiple syndications that are run by somebody else who isn't you, then you get whatever they give you, because you're just an LP in their deal, right? Well, whatever they give you, you take that and you pay out whatever you're going to pay out to your investors, and you keep something for yourself, which means that unless you've negotiated a better class or a better fee or a better pref or whatever it is from those syndicators, they're not getting as much as they would have gotten had they gone directly into that deal. So that's okay, as long as you've disclosed it, but you've got to be providing some value. And the value is, I'm doing diligence on all these operators that you don't have to do. I'm finding these deals that you didn't have. I'm managing this fund. I'm handling all the returns. I'm maybe negotiating a better rate that you couldn't have gotten, but for me raising this fund of funds. Maybe their minimums are 100,000 and you only put 50 into my fund of funds, whatever it is, you have to pick, like, put out there the value that you're bringing to your investors, and then you get paid at the fund of funds level. So that is how you get paid, by raising money, because the issuer isn't paying you, right? The syndicator isn't paying you.
And that's you can do two avenues, a broker dealer model of that, and you can do a registered investment advisor
Yeah, as
model
long
of
as
that.
and I can't really advise you on what the rules are in terms of those regulatory, like the licensing bodies, just SEC. But from an SEC standpoint, that's the universe of ways to get paid for raising capital.
Okay. Yeah, what I'm trying to think about and what I've seen, somebody mentioned something about Dallas. There's a group that's in Plano, and the mother has started a real estate company for hotels and franchises, and she has like $1.5 billion in these things. And the daughter linked into a broker dealer, and she has the broker, so she has like the capital wing arm of the business, and her stuff flows to her mother's company, which is the real estate arm. The real estate arm sends asset management fees to the broker dealer, and that seems like it's a helpful way to do it. And the broker dealer has all people licensed with CFA, all the designations. Like maybe she can't be a general partner on these things because she's already collecting fees. So it kind of would look or feel like double dipping.
Yeah, and I mean, as far as the SEC is concerned, you can double dip as long as you disclose what you're doing. But in terms of some of the other licensing, you may not be able to. So you just have to make sure that you're following whatever the rules are of the brokerage where you're hanging your license.
Okay. Yeah, I'm trying to figure out what the LLC structure should be, and I can't exactly figure that out right now.
Well, once you know which path you're going to go down, I can help you with the LLC. The LLC part is actually fairly easy once you know. It's harder. These decisions are the hard parts, right? Because if you're not raising a ton of money, is it worth it to deal with all the licensing? Maybe not, right? It just depends on how much you're going to raise, and it depends on across how many different operators. I mean, that's the asset classes you mentioned are quite diverse, right? So you'd have to make sure. I would check out your investor base too and see, what's your appetite for risk, because there are some people that would say, yeah, I really love multifamily, but I'm not sure about, I don't know, self-storage is pretty good asset.
Yeah, my thought process.
I love self-storage, so
like,
I'm not saying anything about that. I absolutely love it, but there might be investors that I like this asset class because I get it, but I don't get that one. So I would invest, but I don't love that you're across 3 different asset classes, for example. Or maybe they love it that it's diversified.
My idea would be like different tranches, right? Like there's a fund that is a hotel fund, and then there's a fund that's a self-storage fund, and the same thing for multifamily. And I don't want to be the person that's doing like the construction or the renovations. I want to be the person that's setting up the fund, doing the investor relations, building the decks, sending the distributions, dealing with the bookkeepers. And
well, I mean, all of those things that you're talking about, though, those are actual co-sponsor jobs, right? You're not just raising money. You're a partner, a co-sponsor. All of those things would allow you to be on a GP team and get paid. You just wouldn't be able to get paid a percentage of what you raise, or paid based on whether or not or how much you raise. It would be for all those other things you're doing, building out the deck, doing the marketing, dealing with the lawyers, which is a job, I know. So you'd get paid for all of those things and not for how much you raise. I mean, you actually sound like a really great co-sponsor for probably half the people on this live. And then a ton of clients that I know everybody's looking. That's not true. A lot of people have a ton of deals, and they're looking for people to help them raise money. Doing the reporting and doing all of the other things, those are substantial jobs. When I say substantial jobs, what I'm trying to explain to people is, look, if you go out and raise 10 million bucks and you say, oh, I'm doing investor relations, and really all you're doing is calling your friends and making sure they're not pissed about the deal, that's not really investor relations. You've got to actually be doing the reporting and doing the marketing and doing all the things that you just listed. Right.
Mm-hmm.
So
yeah. Yeah. So is like an idea, if I'm just starting from scratch, is an idea setting up an LLC, and then that LLC would set up an LLC for one hotel fund, and then separately from that, that hotel fund sends money to another company, which would be where the asset management fees are, and also send money profits to the higher up LLC. So essentially, there's not too much going on in that fund level. The structure is what's like hanging me up of how to figure this
Yeah,
out.
you don't have to figure that part out. That's my job. So the
Yeah.
first thing I would do is I would set up a management LLC. What state are you in?
Well, I live in Florida now.
Okay, so I would set up a Florida LLC where you're the manager, and if you have any other people that are with you that are partners in this, whatever's going to be your sponsor company, right? So you set up a management company LLC in Florida. You're the signer. That is your branded company. You're going to put that out there as the brand. That's how you're going to sponsor deals. If you decide to co-sponsor with people, you can co-sponsor with them through your branded LLC. That's fine. But that branded LLC will own no assets. It will just collect your fees. That's it. And it's going to be a non-member manager of your fund LLC. The fund LLC can actually be in Wyoming or Delaware or Nevada or whatever. I like Wyoming. It can be just sitting there collecting money from your investors. And then it can then take that money and invest, right, in other syndicators deals. Now, if you want to separate it out by asset class, I would have fund storage, fund multifamily, fund hotel, right? If you're going to keep them separate, and the manager is the non-member manager of all of them. Now, how you own your share of each of those funds is going to be a Wyoming LLC. And all it's going to do, it's going to make zero decisions. It's going to just sit there and be a basket for your ownership of your safe assets. You can put gold in there. You can put cash in there. You can put your Class B and your passive Class A investments in there. That's your structure.
Okay. Yeah, I appreciate it. I think like maybe next year is when I'm trying to really get into it. So this is a year of figuring it all out.
Yeah, that's perfect. And I would just keep developing those relationships, right? It's if you go in as a co-sponsor, that is a marriage, right? So you're going to want to use this year to develop those relationships because you're in a partnership for 5 to 7 years, usually.
And I'll chime in really quick. All of the goodness that she just gave you, be sure to put your check in the mail.